Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you what you need to know before you go, and that starts out with the economic data. See how that impacts the overall markets, and then do a little market analysis. In the meantime, we'll sprinkle in some geopolitical fodder to round all that out. All right, so without further ado, let's get on with it. Across the pond, we got the PMI numbers. Remember, we have the flash estimates. First, this ones we really are going to look at. These are just kind of like the hammered out numbers, fine-tuned, if you will. So all of these numbers coming out above 50 is expansion in the economy. Only one really missed, and that was Spanish PMI. So for the better part, nice beat on those headline numbers for PMI, purchasing managers. Remember, those are forward-looking. French industrial production waned a little bit, coming off the negative 0.9%, expected to be up negative 0.4%. So they were expecting some pullback here, but not quite as much as we saw there. A little revision to the last month's number will make up for that, but not really going to clean up that number like we'd like to see. Then here in the United States, we get our ISM, which is the Institute for Supply Management. That's one of the most important numbers we look at, forward looking again, and for the service sector. Since we're a service sector economy, this is one you're going to want to keep your eyes out for. Do not want to see that pullback below 50. Not really expecting to see that. It's supposed to come in somewhere closer to 60, but I think it's going to come in closer to 50 than 60 myself. All right, and then we also get the FOMC meeting minutes and crude oil inventory. So that is going to be what is going to be driving this market here. Crude oil already starting to make those gains to the upside after settling on the 50-day simple moving average. Nice little support there. Looks like we're holding on to the 100 handle here for quite some time, and that is going to be where folks are looking at above $4 a barrel there. Another uptick there. All right, bonds starting to slide a little bit. We talked about this. If interest rates go up, that means the price of bonds have to go down. And if they are pushing interest rates higher, that is going to force the price of bonds down as well. Another thing is, remember, they have stopped their asset purchases, which means they're not supporting the bond price anymore. Gold futures continues to test this 1923 area. That's been the real support and resistance area that lines up to the financial crisis high. Something else we've drawn in here are these nice little trend channel lines, if you will. I'm going to follow these because they have acted as support on the way up there. So I'm going to look for that to follow through. So risk is to the upside here in gold. I think risk is to the downside in bonds, and risk is to the upside in crude oil at this point. Bitcoin, I really don't have a whole lot to say here. It's going to really need some type of catalyst to get this market moving, because it seems like it's kind of fallen into the shadows, if you will, where it's just not getting the limelight it used to be. And that's going to be something that's really going to make this market struggle to move. Now, VIX did come off, but we are in the middle of earnings here, and that earnings season is what's going to be giving us our directional move here for the next foreseeable future, because there's not really any economic data, and unless China or Russia really starts doing anything out of the ordinary, which could easily happen, I think that this market's going to be stuck in the mud. And we've talked about this. The NASDAQ right here at the point of control, where the most time and volume has been spent. E-mini S&P is very similar. So when folks have gotten the markets back to where we're accustomed to trading, it's going to take a really heavy punch to get us to move out of that area. And right now, I don't think earnings is going to be that catalyst to do it. It will give us a bit of a trajectory on the directional move here, but it's just not going to give us a massive spike in the equities here. Dow Jones Industrial Average, again, right at the point of control. Even the S&Ps, we've talked about this for quite some time. They were going to be the ones that would probably extend, and they've got a couple of extra value area nodes, if you will, where we can see some spikes there. Those are other areas where folks will settle down their trading because of that component of seeing price trade. So again, risk probably more to the downside in E-mini S&Ps at this point on a correction, because people have just bought those, so they're going to be considered to be weaker hands. They haven't fallen in love with those stocks as of yet. And then, as you can see, we haven't gotten anywhere overnight, maybe down slightly for just a slightly bearish open, but for the most part, it's pretty neutral across the board. Again, though, a risk is to the downside here in equities. I think it's more fragile to the downside than there's anything that can be a kick in the pants to get us to move higher here. And, it's a quiet news week when all we're hearing folks talk about is Elon Musk and Jack Dorsey between Twitter and Tesla. Basically, a 9% stake is what Elon Musk has accumulated. He actually has gotten onto the board. Now, recently, remember, Jack Dorsey left Twitter's board. So it'll be interesting dynamic here. A lot of folks are saying, that because of that right leaning voice, if you will, at the board, that some of this will become more of a free speech type of platform. Right now, it's not necessarily considered free speech when they're a little bit more biased on who they throttle. All right. So that said, I think we'll probably see some sparks flying at Twitter here, and that Elon Musk, Jack Dorsey dynamic really could start stirring things up. So I would say risk for Twitter is to the upside. I don't know if right here at $50 a share is the place to be jumping in, but any type of pullback would be something I'd be considering. Maybe even looking to sell some puts is probably the way to go here. Try and not really encompass that earnings call, but try and start sell some puts and add a little Twitter to the portfolio. All right, folks, that's all I got for you guys. If you can't take that, take it easy.